It's July the 3rd, 2020, and I wanted to provide an update on my speculative trade in the market that I made a couple of days ago. I purchased a position that would allow me to profit if the stock market went down, but I would lose money if the stock market went up. And the reason that I made that investment of, I think it was like $28,000, I used $25,000 of my money and $3,000 that I borrowed on margin to purchase a symbol called the SDS. And I think you can just plug in here the symbol on my screen and see the SDS. It's called the ProShares Trust, ProShares Ultra Short S&P 500. What that position offered me is exposure to the entire S&P 500, which are 500 stocks, 500 companies that theoretically represent the US economy. And it is actually double exposure to the S&P 500. So if the S&P 500 goes up, the position that I hold is going to drop. If the S&P 500 goes down, the position I hold is going to rise. And I purchased this position at $19.13. I bought 1,500 shares. And today I can see at 5:30 in the morning on July the 3rd, it is trading at $18.71. That's where it closed yesterday. What does that mean? Well, that means I lost 29 cents, 39 cents, 39, about 35 cents a share on 1,500 shares. So I'm down, right? I'm down right now in my position. So I anticipated that the market would go down. Instead, the S&P 500 went up. And as a result of that, the value of my holding is less valuable today than it was 2 days ago when I purchased the position. Now, the stock market, what we need to think about or understand is I used to use an analogy when I was speculating in the market while I was in prison, is that the market is like a roller coaster. Okay? Nobody gets hurt on a roller coaster unless they jump off. Okay? You've got to assess your positions every day and say, well, am I happy with where I am? Or maybe every quarter, or maybe every month. I mean, you have to make a decision on what's important for you. For me right now, I'm looking at macro factors. And the reason that I took this position was because the stock market has really done quite well over the past couple of months, right? When the pandemic began, the market really imploded. It went from about 29,000 down to about 18,000. And when that happened, people that were long the market really lost a significant portion of equity. Now, as long as they held on to their stocks, they didn't lose any money unless they panicked and they sold. Since then, since the market dropped to 18,000, what have we seen? We've seen the market recover in a significant way. I mean, I'm looking here on another section of my screen where I can see a longer term trend. In fact, if I go here, I can show it to you. DJI. All right, just look at the Dow Jones Industrial Averages, and I can look at a little chart here over the past 3 months. And you can actually, let's look at it over 6 months and see if I can grow this chart. I'll try and grow it in the post-production. But you can see this drop. The market was going very well until the pandemic hit, and then there was just a cataclysmic drop, just decimating, obliterating value in the stock market. But since then, it's really climbed very well. If I look over 3 months, you look like the market, you can see that the market has really grown. And I purchased this equity position for a specific reason, because while the market was recovering, we were seeing other problems in the global economy. For example, let's look back here and just look at the headlines today. And today is July the 3rd, 2020. You're seeing infections rising in 36 states. You're seeing things like California, where I live, goes from a success story to a cautionary tale. You're seeing signs that the White House will not let the CDC brief the public. We're seeing, polls, 75% of the American public thinks the United States is out of control. I don't make a political commentary. All I do is I look at macro information like this, and I make a decision. Well, what do I think is going to happen when the United States thinks that the country is out of control? When I see the other issues that's going on in the market that are just, kind of concerning to me, what I think will happen. Experts fear the end of the eviction moratoriums could plunge thousands of people into homelessness. what else am I looking at today? I was looking at for something about unemployment. Where is the unemployment rate? So the market is really skyrocketing, really doing quite well, but unemployment rates, on the other hand, unemployment rates. Let's just see what it says. How many people are unemployed? Unemployment rate, Bureau of Labor Statistics. What are they saying here? There you're seeing the unemployment rates, how they have risen. Now it's fallen a little bit, but it's still at historic levels. So if people aren't working, it would just seem to me, how many people are unemployed in the U.S.? Let's see what it says. Unemployment rate, Bureau of Statistics, 2020, June 2020 jobs report. The U.S. economy added 5 million jobs, but that's after losing 40 million jobs previously. There are more people getting unemployment benefits than there are unemployed workers. This is, to me, a sign that suggests the market is vulnerable. And it's vulnerable to me because I see how far it has run in the past. S&P, okay, huge volatility here from 3,100 down to the bottom when it was crushed in late March, early April. Huge rise through April, May, and June. Now, the question is, do I think it's more likely that the market goes up here or the market comes back down here and settles a little bit? I made the play on a speculative move, understanding that I could make money, I could lose money, but believing it was more likely that the S&P 500 comes back down to around 3,000, maybe even a little lower, maybe 2,900. And if that happens, the position I hold will, E-Trade, the position I hold will likely climb to about $25 from $19, which would be a great little move. So I'm just going to hold the position for a little while. Right now, you can see that I'm down $285 on my position. I may add a little more to it, or I may just hold on to it. Either way, it's just part of the journey of being a speculator in the stock market.